YouTube? CFX here back with another video, and in this video, we're just gonna have a little bit of market structure talk, but it's gonna be a little bit different. This is really gonna be like a little study session, and I'm gonna go over some trades that I have highlighted here, as you guys can see, and these are trades that were taken by millionaire traders. These are trades that were taken by millionaire traders, and I just want to go over them. And one of these trades are an actual trade that I took myself this week. So we're going to review it real quick, and we're going to analyze what we see and see how we can recognize this in the future. So first pair that we have here is USD CAD, and this was a buy. So let me make this green. And this was where they set their TP, or basically where they got out of the trade. So first thing that I noticed right off the back is it is forming a pattern. It is forming a pattern. And this is a pattern that you guys will be able to learn. It's actually a very common pattern. And it's the inverted head and shoulders. It is the inverted head and shoulders. So that is a pattern that I noticed right off the back from looking at this. And almost a perfect inverted head and shoulders. This shoulder is just a little bit higher, but overall came right back down to the same point. And he placed his entry right at the opening of a candle, it looks like. From my guess, he may have placed his entry right at the opening of either this candle or this candle. Either one, or maybe it was this one. But just looking at this candlestick right here, we have a doji. So we have a doji right after a bullish candle, and we got it right at the point of a support almost. And also I see a little resistance right here as well at this point. Let me highlight this for you guys. So this is where the resistance was at this same line, came back, formed a support right here. So resistance became a support. It dipped below a little bit, then shot right back up and came right back down to this point. So I guess it looks like he was trying to see where it may be building order blocks, which it was right here. And you could tell just from these wicks that it was building up liquidity in this area, because this is on an hour time frame. So it stayed in this area for 1, 2, 3, 4 hours. You see it wicked out as well on these candlesticks right here at this point. So it wicked out with these two candlesticks, formed a doji, and then it never closed below this line right here. So I guess that's what he was looking at. It never closed below this line of our support, and it stayed there for 4 hours. And then on this candlestick, it finally shot up. So we have liquidity where buyers are at. How do we know that buyers in this area? Well, you look over here. Look what happened when it came down to this area. Look what happened. Again, look what happened right here. So instead of making it pinpoint, this is actually a whole zone. Look at that. Look at that. So this is actually a demand zone. Okay. And that's why I like looking at zones more so than a pinpoint area. Because once you put it in a zone, everything looks and makes a whole lot more sense. So, yeah. So we have liquidity forming right here in this area. We have order blocks for buyers. And then we got it wicking out. Never close below this point. We have an inverted head and shoulders. And we also got divergence. So this one is kind of hidden. It's just a little bit hidden. You have to really look at it to really see. But we got some divergence right here as well from where it took off. And what divergence is basically, I like to use the RSI and stochastic, but let's say we have a swing low right here. And as you guys can see, this point to this point, it is a higher low. From this point to that point is a higher low. But on our RSI and stochastic, it is a lower low. So that is telling me that the buyers are getting ready, or this market is getting ready to buy up. So that is divergence. So we have a lot of things lining up. We also have the market forming higher lows. So from this point, I'll use the path. So we start here, we have a low. Boom, boom. Okay. So we just made a higher low for the first time. Then we go back up, we just made a higher high. Okay. So it just broke this structure point right over here. It just broke this high over here. So that is showing me that this market is getting ready to reverse. So then we come back down. What happens? We make another higher low. And then the market shoots up. So that's just basic price action right there and market structure. So that's perfect. This is a perfect trade. It's crazy, man. This is a perfect trade. So going off of his confirmations, we have a price break above a previous higher low. Higher. Okay, let me restart that. Going off of his confirmations, we have a price break going above a previous lower high. We also have a higher low. So that's a sign of reversal, right? We have divergence in the market. We also have it in a demand area where buyers are strong in the market. We had it building order blocks or liquidity right here in this area. We have a point A to point B for a trend. So we're getting the sign of an uptrend. And if this trend was to continue on, we'll more than likely come back, touch this point, maybe meet around the 200 EMA. The 50 EMA. I would get in at the 50 EMA instead of waiting for it to come back and touch this trend line. I would get in early at the 50 EMA if they are close to each other. So let's look at this as well. Boom. So yep, we got that price break. It broke that trend structure. Boom, came back down, retouched the trend. That's how he was able to choose his entry as well. Okay. So I'm starting to see why he chose to get in this trade right here. Starting to see why he chose to get in this trade right here. So it broke the structure of a downtrend right here. Boom. Broke it right there. And it closed above it. Also closed above this resistance that was right here. It broke it, closed above it. So there's two breaks. Another confirmation, this higher low leading to a higher high. Came back, retouched the trend line, and also created a point A to point B for an uptrend. So it came back and retouched the trend line of the downtrend, which is what you would like to see. You would like to see a break and retest of structure. So we got the break, then we got the retest. Boom. And then we got a point A to point B of an uptrend, creating that divergence right here. And this is a perfect trade. Plus the inverted head and shoulders that we marked up earlier. This is what a perfect trade looks like. I'm gonna put everything on here so you guys can see. I want you guys to take a screenshot of this. This is what a perfect trade looks like. So its entry was right here at the green line for a buy. It broke two levels of a downward trend structure, a resistance, and it broke the downtrend. You got the point A to point B for an uptrend. Bro, this is crazy. This is what you call confluence. This is what you call confluence, ladies and gentlemen. When everything lines up. When you have multiple confirmations lined up for the market. The only thing that he didn't have on his side was the 50 and 200 EMA, because these are indicating that the market is in a downtrend, right? Which is probably why he had a very short TP, but he also set the TP right to the structure of where resistance was previously. So that's where he set his TP at. I wonder where he set his stop loss. Probably outside of this right here. Let's see, if he was to set his stop loss outside of that area, then what ratio would this trade be? So right there is just a 1-to-1. So this is definitely more than a 1-to-1. So 3-to-1, no. And this is just a guess. I mean, I don't know how tight he had his stop loss. This is just a guess. So that's pretty much how that trade would look. But that is a great trade. Great trade. Alright. Let's move on to Euro JPY. Now this one is the trade that I did take. And I want you guys to see this. So here in the market, we have it at a supply area. Let me zoom out real quick so you guys can see. So it came to a supply area that it haven't been to in a long time, right? It haven't been in this area since June 15th. It's the last time that the market was this high and in this area. So I knew that once it came to this area again, it was definitely going to show some resistance in the supply zone. and that's why I got in at that point. Now, let's see what else we have. We have a upward triangle. I don't like to go by all the names. I don't like to overcomplicate it. I just call it an upward triangle. So we have it in the uptrend, and I set this right here because if it broke above this, then it was more than likely going to continue on the uptrend. If it broke below this, then that was going to be an indication that this market was going to go in the downtrend. So whichever one it broke above first or below, that was my trade right there. So if it broke above this, and it was more than likely going to go outside of this supply area and then continue up because it did have a lot of upward momentum. It had a very strong upward momentum. Or it was going to respect the supply area, break below the trend, come back and retest it, which is where you would have got your entry, and then boom. So now, so that's pretty much how I saw that trade. We also have very heavy divergence. So that was another confirmation for that trade. It was very heavy in the divergence. But this one right here is just a break and retest. This is where you would have got your entry. I entered a little bit early. And no, actually I entered right on time. I wanted to see if it would want to retest and respect it. So once I got this candle right here, after retest, then I entered on this one. So that's where I entered at, and then boom, it sold down from there on out. So that was a great setup as well, using supply, the break and retest of a trend, and divergence. Those are my confirmations for that trade. Let's go on to AUD/JPY. So this one was a sell. Let's break it down to the 1 hour. Alright, so let's do a top down, because that's maybe what we need. Zoom out. Okay. So right off the bat, let's look to the left. Let's see what we find. Okay, boom. I see. Was not trying to do that. I see that we do have some resistance here. See that we have resistance here and a supply area. So we have a supply zone right here. Boom. Okay. We have liquidity in the market for sellers in this area. So even if you caught this buy, again, inverted head and shoulders, almost like a double bottom too. Whichever one you would have went by, but it looked more like an inverted head and shoulders, kinda. So, but we're looking at this for the sale. So that's my daily setup. Okay. Also got a very strong selling candle from the daily right here. Got a strong sell on this candle once it hit the supply area. Okay, let's see what else. Let's go down to the 4 hour. Okay, some more candles indicating that the market is ready to sell. Also, a break and retest. So we got a little support right here, right? And push the market up. Once it hit this line, I'm gonna make it black. You guys know. Well, don't get confused. All right, so support right here, push the area up, or push the market up. Broke, came back and retested that same line. Boom, entered it on the opening of this candlestick. That's my guess. That is my guess. Just looking at from where the entry took place and looking at where the candlestick opened at. But once you got the confirmation that this support now became a resistance, and then got that confirmation candle right there. Let's go down to the 1 hour and look some more. This is definitely a short-term sale though. This is just a quick little trade from what I see. So yeah, we got the doji. So right after a strong bearish candle, we got a doji, and then another strong bearish candle. Okay. Could have did the same thing right here. Maybe would have just had to deal with that pullback. But this is not a good area to enter anyway, because you do not have anything supporting that. You don't have anything supporting your sale right here at all. Whereas right here, you got it pulling back up to a support, and then respecting that support and now making it a resistance. Boom. Again, you have resistance right here. It came up and touched it twice. So actually 3 times. So that's where the resistance came from after that support. So you got to touch right here, and then the touch right here. Okay, so once you got that confirmation that it's going to respect that resistance, it sold back down again. Then it broke the structure of this support right here that it formed. Okay. And guys, this is just me analyzing the trade. Like, obviously I'm not in his head. I wasn't there with him when he took this trade. But I'm just trying to see what he saw before he took this trade. So let's go down to the 30-minute now. Let's look at these candlesticks more. So I don't even want to look at what happened after the trade. I want to see what happened before that made him look or take this. Got the cross of the 50 and the 200 on a 30-minute time frame. Check the hour. I think it's still way above. Yeah, on an hour it's still way above. So that's probably why he had the TP so tight. He was just looking for a short-term sale, which explains why the TP is right here. Once he got that cross of the 50, but the cross didn't happen until a little bit after a while. But you could kind of tell that it's about to sell back down. Also, got a double top on the wick. So looking at these three candlesticks right here, we got a bearish, then we have a bullish engulfing, but right after it we got another bearish that covered over half of that candlestick, both of them giving a wick out the top. That's an indication that the sellers are in the market, pushing this market down the way it did. Okay, so now that we're analyzing this top down, it's starting to make more sense now on why he took this trade. So this candlestick being able to cover over half of this bullish candlestick makes sense on why he took the sale along with everything else that we went over so far. Because if you see a candlestick like this, especially after seeing movement as we did right here, it's a great confirmation that sellers are still in the market and ready to push this market down even more. So my guess is once it broke this support right here and it pulled back to it, that was when he decided to take the entry. And once it pulled back to it on this candlestick, because you guys see it's a long wick right here, and that's when he took it. Okay. So that all makes sense now. Is there any divergence? Yes, there is. There's also divergence on the 30-minute time frame. Boom. We have it going to a lower high on our RSI stochastic, but we have a higher high on our charts. So the 30-minute time frame looks to be the time frame that he dictated this trade off of, because everything is lining up on the 30-minute time frame. Let's go down to the 15-minute. So yeah, on the 15-minute, our 50 is actually below our 200 EMA. And that's why it's very important to use multiple time frames. That's why it's very important. May be able to catch something. And I want to say he made, not to put his profits out there, but let's just say he made a band off of it. Actually, over a band off that trade. I'm not going to tell you the exact price, but he made over a band off that trade. That's crazy. All right, let's go on to USD JPY for the last trade. So this one was also a sell. Now, let's start from 4 hour. Let me zoom out. Let's go to the daily. Okay, so on the daily, we got a doji and we got two bearish candlesticks. So reversal, let's look to the left. Anything to the left of us? Nope. Alright. So let's see. Almost the same thing as was it I think it was ADJ, but it was basically like this. We got the break and then the retouch. So we had a support right here. Came back and retouched it. So back down. It looks to be the same thing. I even have apparently I was looking at this because I have a demand area right here. Let's spread this all the way over here. Yep. Okay. So yeah, it looks about to be the same. You got a break, which explains another tight TP. A very tight TP. So let's go ahead and go all the way to the 30-minute and let's see what we see there. So we got the cross, boom, of the 50 and the 200. Then came back and retested. Now I went a little bit above it. So what I'm thinking is he may have caught a perfect entry right here off this 50, but he probably went through a little bit of pullback. Once he got the break right here and got the retest, sold back down, got a little bit of pullback, and then boom, sold down for the rest. But still, let's analyze it. So this was a support right here, as you guys can see. It also was our demand area. Over here to the left of us, it was used as a demand. So it broke below our demand, right? It broke below our demand area and came back and retested right here to what was a support, now has become a resistance. So this is where he caught the entry. So down, or I don't know if he took it right here or right here, but either way, his entry was at 114.015. So either he had a little bit of pullback or caught it right here. All right. So a support become a resistance. We got the breakup structure. Now, let's read our candlesticks. We're not getting like just huge bearish candlesticks until we get to right here. And that's fine. But let's see if we can find more indications on sellers in the market. So do we have any divergence? Okay, we did right here. Boom, which is an indication that sellers are in the market. Well, I mean that this market is ready to sell. So my guess is that he took this trade right here and then held it and withered the storm for an hour or so. Because when it was in a deep pullback from his entry, it went up over 100 pips. So yeah, probably went through a little bit of pullback for a while. Then it sold down. Okay, so we got divergence right here. Got the breaker structure as well of that support that has now become a resistance, creating divergence at the perfect point. Okay, let's see what else. If he took his entry right here, we have a decrease of buyer's momentum. So we got these large engulfing candles. And then after that, we see the candles getting smaller, which is showing that buyers are losing momentum. Okay, that's what we would like to see. Again, comes up to here. After an engulfing, we get a smaller candle leading to a doji, leading to a bearish candle right afterwards. Now looking at this, kind of would have thought buyers was coming back in the market right here. Got this doji and then an engulfing candle. I would have thought maybe this was creating an uptrend now here. Boom, boom, boom. But either way, that second candlestick, and why you always wait two candlesticks in a row. You want two candlesticks of whatever you're looking for. So if you're looking for a buy, you want two bullish engulfing candlesticks. That first engulfing is just a minor confirmation. Then once you get the second one, boom, you know that you can hop in that trade. And vice versa for bearish. Bearish means sell, bullish means buy. Alright. So yeah. See why he took this trade now. Got some divergence. We got a breakup structure over support. Let's go to the 15 minutes. Yeah, this is definitely a clear indication that buyers are losing momentum. Sellers are coming in the market. So yeah, that everything is starting to make more sense on why he took this trade. If you see that whoever is losing momentum in the area of a breakup structure, like right here, it was support, right? Again, We got the break. It came back and retested it and then built a resistance at that same point, and it came into that demand zone that is now a supply zone, and we're seeing resistance in that area. So that's an indication that sellers are in the market now instead of buyers. At first, this zone was used for buyers. Now, this zone is used for sellers. Things can always flip, guys. A support can become a resistance can become a support. A supply can become a demand, and a demand can become a supply. It can always flip back and forth. So that's why you always want to read your candlestick. That just comes with candlestick analysis and understanding market structure. But those are the breakdown of the trades that Anthony Wells took this week. This was just my analysis of them, just a little study session for myself, but I wanted to record it to help you guys understand it as well. And I wanted to say these two are definitely my favorite setups, Euro JPY and USD CAD. Those were my favorite setups of the week. These are amazing trades. But hopefully this video helped you guys, and if so, leave a like, comment, and subscribe, and turn those bell notifications for more videos like these. And also, Capital Powerhouse just launched a course going over all of these confirmations and indicators and the strategy that you can use for yourself and how to put it all together and become a profitable trader. The link will be in my description below. Just click it, and I will see you guys in the Telegram chat. I'm out.